All right. The countdown is on. Good morning, good afternoon, and good evening. Yes, indeed. It's 8:30 here in the East Coast on the U.S., and it's 10:30. Whoa, let's kill that sound. And it is 10:30 in, there we go, 10:30 in Tokyo. There we go. So we got the numbers all figured out in between. Traders everywhere. So the countdown is on. Tomorrow, CPI. They're staring at these numbers as as if they're going to be, I guess, dominant, and I guess they will be on a short-term basis. It kind of reminds me now of the Janos, and I always mention it here too. The Janos videos on fundamentals and how they trade, how the markets trade on the fundamentals, and how the lack of follow through and so forth. They'll do something to it. Will they really have that much influence? Not with QE and the central, the Federal Reserve. The Federal Reserve will stop whatever's going on, so it doesn't really matter that much. But on a very short-term basis, it could raise it up or knock it down. And that is kind of like the gist of it all, really. And it's kind of odd, but it is. And when we look at the markets, let's get over to the markets. When you look at the markets itself, they don't seem to have much energy to them. You can see here the dollar index on a daily over on J4X here. Yeah, it's just kind of plodding along. Same thing here on that's the euro. Let's take a look at the dollar index. Right there. There's the dollar index. Just kind of plodding along. No real major action in it. You can see the dollar's been gliding. I call it gliding. It's kind of sliding down slow and steadily, from the 106 area down to the 101, 102 area. They really have a hard time busting that par. It kind of reminds me of the old days when everybody would say, "Come on, Doc, tell us, when's the euro going to break one? When is it going to break one?" And for like a decade, I heard people asking me that question. I says, "When it does." And then the inflation, which really, really surprised, obviously, all the I want to call it the political leadership on the left that's in control. I guess that's the best way to describe it. So in other words, Mrs. Yellen and the President of the United States and every other cabinet officer kept on saying, it's transitory. Don't worry about it. It's going to go away in a few months. And the Federal Reserve Chairman said, listen to them. They're right. And that was 2 years ago, in July of 2021, just 6 months after Mr. Biden had taken full control of everything. He'd been 6 months in control, and all of a sudden, we're at 5.5% and 6% inflation, and people are just laughing it off inside the administration and the institutions and the central banks. And then it wasn't until basically March. It took another 7 months for them, almost a year. It was like 9 months for them to accept that they had ignited inflation, and they didn't really care. And so that's what we're looking at here now, is that this action, that's what we're doing. We're doing a countdown on inflation. That's what it is. Let's see if it twisted to the right by 1 centimeter, or if it twisted to the left by 1 centimeter, or if it sat still. That's really what it comes down to. It's like Kabbalic. It doesn't. It's not. It's and the Federal Reserve is pumping out dollars left and right to institutions and banks and brokerage houses and hedge funds and everybody getting dollars overnight for free. So, it's really hard for me personally to take the mechanics of it serious. In other words, they're going to do what they're going to do. Our math is usually ahead of them, so I have no problem there. And that's what we kind of do, is we watch the math and we see the action, and it kind of tells us where they want to go. And so tomorrow's number, it'll ignite it on one level or another, but will it really mean much? No, not really. No, it's policies of the government that needs to change. And so unless they change the policies, we're not going to see anything more than just probably parked in this area. I think they someone had said, they referred to it this morning as, you're going to see the core rate stingy. That's right, stingy. In other words, it's greedy. It wants it for itself. It doesn't want to move, And they said, maybe the month rate will be a little bit better, but overall the core rate will be stingy. So in other words, it doesn't really matter what comes out tomorrow, because it's not going to be blowing up, way up high, or it's not going to be dropping dramatically low. It's been a couple years of this building of the inflation, and until they, the change in the House has slowed down the spending. Mountain West, I like that one. Mountain West, that's a goodie. I like that. Mountain West. I'm thinking about suspicious observers when I hear that. If you're on the I've talked to you about that east side of the Rockies, the suspicious observers are organized there. Mountain West. So, tomorrow will be a big number that everybody is excited about, and it'll probably do not much. And then I would imagine there's just like a drift. Now, yesterday's title of the webinar was crypto's lead indices, and they did the S&P and so forth. All of them are trying to climb, but the Bitcoin, which is how I follow the indices, the cryptos, has made it through the 30,000 again. And so let's put it up on there, because I heard a really interesting concept this morning on one of the financial channels about cryptos and people that have too much money in the banks. What's stopping them to just buy a crypto and sell a call and buy a put and walk away and not worry? And this way no one can basically attack your capital, because it's guaranteed with the put underneath. It's paid for by selling the call, and here you are along your asset. And that really doesn't help with bad government policies. In other words, that is going to grow. That will grow. People are probably moving. That's why we see the strength in the cryptos. There it is there now. As you can see, it's 30,101 at 30,176. So it's a little wide there, but that is what it is. And it's a trading product, and it's real. I don't have any Bitcoin, but I think it's going to 100,000. I think what it really comes down to is not the fact that you don't have any Bitcoin. Is that if you are stuck, let's say you have a few $1 million, then obviously it makes sense for you to have some Bitcoin, because you can actually park some of that capital in something that can't be influenced by anything but electricity. And so I think that's that's just you're buying government bonds. If you buy government bonds, in other words, you can only insure $250,000 in a bank account. You only can insure $500,000 in a brokerage account. And so if you want to have like an alternative place to hide, then it makes sense, because you can use the options to hedge it all. In other words, I always see marrying options into the hard, the underlining product all the time when you're trying to. You create your own synthetic bonds, basically. It's a synthetic bond that you control, and the bond vigilantes can't hurt you. And that's what it really comes down to. And so, it wouldn't surprise me if it made 100,000 over the next couple years. It depends on the economics, really, and the government. The worse government gets, the more cryptos will probably look better. And the better the government looks, probably the cryptos will just stay the same very solidly. It reminds me of, I guess the best analogy, and its trading action reminds me of the internet bubble, where the Tech 100 got up to 5,000. Now it's trading at like 13,000. But in 1999, it had doubled. The index had exploded to over 5,000. The index did. And it was just incredible. I mean, Amazon was trading at $200 a share and it had no earnings, things like that, And then we had the internet bubble, and it took something like 15 years for it to get back to 5,000. It fell down to like 1,200. It's just the same way Bitcoin in some ways fell about 60%. Maybe it was like 1,500 or something like that, and it fell down into the in the 2/3 pullback, and it stayed like that for like a decade and a half. It went on for a long while, and then finally, somewhere around 14 or so, 2014, with quantitative easing, it finally got its way back up to all-time highs after like 14 years. And the Dow had been making all-time highs, and the S&P had been making all-time highs all throughout that event. But it took the Tech 100 almost 15 years to get back to it. And it kind of reminds me also of the Nikkei. The Nikkei's all-time high is 39,000, and we've seen it get up to about 33,000. And it's still paying the price of the currency translation and the in 1986, 87, I think it was 1992 or 93, the Nikkei hit 39,000, and then fell all the way down to like a 0.78 retracement. It was down into something like 8,000 or something like that. So, the cryptos have done the same thing. The Bitcoin topped out about 60,000 and has fallen down to about 15,000, and now we're sitting at 30,000. And it could vacillate like this for a bunch of years. And maybe we may not see the 100,000 for, I don't know, 6-7 years from now or something like that. It wouldn't surprise me at all. But I'm a supporter of the cryptos because it's a good alternative investment tool, and obviously the number one reason I can respect it is it has calls and puts. This way you can hedge yourself, put the position on and hedge it, protect it, and at the same time have that alternative of government lack of government influence, that type of thing. So, all right, from there, and we can look at it on. Let's look on the Chicago Quant too. Let's see, right there. It's just pressing up also at the same time. Really trying to. It's up a little bit. It's up to 370 now. The futures contract, so there's a little premium to it. It tried to go into the sell. Yeah, went into the sell and then went into the buy yesterday again. So it was just one day in the sell and then back into the buy, like that. There we are. And so the product has been very good. It's in the weekly buy for a bunch of weeks. It's very solid. And it, will it get to the 40s again? I could see that. And then I could see it, kind of digesting the action. There's it's a very, we're in a very rare. Well, we're in a different times than what we're used to. There was a time where you had market forces by, institutions, retirement funds, hedge funds, pension funds, all these other alternatives were out there nibbling away at assets, buying them and rotating and, rotating out of some and into others. And now you have, and then you had the New York Stock Exchange specialists, controlling the markets when it came to the equity market. And, it was just a whole different creature. And now the New York Stock Exchange is owned by the Futures Exchange, the international, the ICE, and the specialists are almost non-existent. And I hear the stories all the time of brokerage houses having problems, making markets because the markets are so tight that they don't want to make markets. So these are different times, and what we bring here to this webinar is the fact that we identify those different times and what dominates those decision-making process, and it's the technical analysis. You can see the technical analysis is so much more involved. You can see where they bounce off of Fibonacci numbers now, whereas 15 and 20 years ago, they could hit a Fibonacci number. They might bounce a little bit, but they weren't dominated by it. Moving averages have always been somewhat of a religion to the investing. The 15 and 200-day moving average has been something important to institutions. After that, it's been almost non-existent. stochastics and MACD and RSI. They used to refer to them as voodoo, not to denigrate voodoo, but they said it was like magic. You know, it was not real. You couldn't invest by it. Now, markets move on it every day. You can see it. You know, the MACD goes to the bottom. Markets try to turn up. Moving averages go to the top. They try to sell it down. So you can see, as I have my sip my tea there, you can see that the markets are really dominated by the technical analysis. All right, no questions so far, so let's jump into the next product, and that is the euro. Let's see what the euro is up to this morning. And there's the euro there. It's lifting back up after a couple days in the sell. It's threatening. You know, you can see price-wise it's moving up nice. It's in the weekly buy, so the sell has only been just like a mild warning of just back and fill. And let's put it up over here on Chicago or J4X right there. There we are. You can see all that red, and it's trying to turn up, and we're coming down to the low mid-range. Actually, you can see that in the two different stochastics that we're watching battle with each other. You know, they're just kind of bouncing around. No real solid push at the moment. You know, the euro, as far as I'm concerned, is more on the drift up than it is on the drift down, just solely because so many people are trying to diversify again away from that mad rush that was into the dollar as the inflation. See, everything is based off that inflation. The inflation explodes, and everybody runs to the dollar because they didn't know where else to go. Now, we saw the Turkish lira a couple of days ago. I mean, that's gone from 1 to 20, but we're starting to see some positive movement. I understand that in the Black Sea, their natural gas deposits look like it's going to be a very successful successful thing for Turkey. They say it's going to be like 35 years of natural gas, and that's really good. That's what the country needs. It needs some type of equity increase because the currency's gone from 1 to 20. That's an incredible inflation. So let's put it up there real quick. We'll just jump right to it because we had that wild Friday number. It's trading at 21 now. Euro against the Turkish lira. I got another sneeze in there. Excuse me. I think I have one more sneeze in me. I don't know what's going on here. Wow. 4 sneezes. So yeah, the currencies have a natural tendency to gain against the dollar, minus obviously the Turkish lira here. And you would think with that good oil news that it would start to firm up and roll over again. You can see the weekly's done it. You see that weekly pressure's on it right there, but not happening. Let's just put it up on J4X too. Right there. Yeah, and the 21s. There's like no relief. Earthquakes, currencies, things are just not moving in the right direction. At least they've gotten the natural gas. That's good. They've been saying that there's a lot of natural gas in that area. So thank goodness Turkey finally found some. All right. So from the Turkish lira and the euro, we'll slide over to the British pound. British pound trying to lift itself back up again also. And, I guess the combination, the more, here's a good suggestion. I've said this before in the webinars. Probably the more inflation disappears, or at least looks like it's starting to stabilize. And that's what it's doing right now. It's becoming much more stable. It's locked in the 6s at this point. We're probably going to see the pairs trades have more strength against the dollar. And it's all because they ran to the dollar when the inflation rate just exploded. They had nowhere else to go. That's why a lot of us who've been trading currencies for over 5 decades, we're like, oh, maybe the euro will pick up the slack. When people go running for the dollar, maybe they'll run towards the euro, and maybe someday they'll even run towards the bricks once they figure out what a brick is. They're trying to create a third alternative. The dollar and the euro are about it at the moment as dominant, and then obviously the yen and the GBP are minor as places to run to, and then it gets thinner and thinner. Canadian and the Swiss, and then the kroner, and then the rest of them fall behind. And maybe sometimes the Australian dollar jumps in, but I mean overall that the euro is a very large trading currency. So, and then the BRICS are like some of the worst currencies in the world at the moment. So it makes it very hard. The best one so far out of the group is the South African rand and the Indian rupee. After that, the other three currencies are almost non-existent. So it'll take a long time for that to get organized. But it probably will. There should be an alternative if they would link it to something that they can live with. That they can't really link it to anything. China can't link it to gold, and Russia can't link it to gold. They can try. Russia can link it to oil, but then that would give up their control of oil. There were people would be taking delivery of their currency, buying their currency and taking delivery of oil, and that would mess things up. So, it's a lot of talk and not a lot of show. They have a saying in cattle country: all hat and no cattle. Dress like a cowboy, look like a cowboy, act like a cowboy, but all you got is the hat and you don't have the herd. So, all right. What else do we got going on here? Trying to think what else. All right, so from there we slide over to the Swiss. See what the Swiss is up to. There's the Swiss right there. And you can see it's looking very firm and very good. It's heading towards the low end today. Weekly sell for 4 days here. That's cool. 4 weeks, I'm sorry, not 4 days. 4 weeks. The fastest has been in a weekly sell since the top. Let's put it over here. Right there. A little green trying to pop up on the daily. But overall, oh yeah, well we had a green buy there yesterday, so we can put that signal in there too. Let's do that. And now it's going back down into the sell again. Oop. There we are. From a slow market, that's why we try not to send out charts on these holidays, because they'll mess with your head. You're like, wait a minute, it said it was long, now it's short. Well, don't trade in these slow, no active days. And if you're a producer, then you can hedge it easily with an option and not get trapped. Let's see. From the Swiss, is there anything else to be said about it? The weekly is way down below the manifold. So whatever curve that's going on at the moment is going to take some work to get straightened out on the upside. Right now it's still telling us down, down, down. Now, I don't really expect to see it break much more than to the 89 area, but that's better than it up at 101, that's for sure. That was really a real shake-up, I guess you could say, in many ways. The idea that it ran all the way up to the 101 area. There was, I guess, a lot of risk, from the banking situation, and when it pushed, when it pushed out like that, it really, just kind of shook everything up. So, all right, from there, We go back. No questions. Oh, wait a minute. Here we go. Stock market seems unsettled today. It's really going nowhere. We can put it up on the screen here. It's really going nowhere. It doesn't really have a lot of conviction. How did we get with Robin? How did I do that? Okay, let's fix that too. No, got to fix that. The label got screwed up. Save as, that's what it is. I accidentally saved it as the wrong thing. There it is right there. Yep. So you can see here the stock, the stock market's really quiet. I mean, when you really look at it, that's pretty broad for short term. That's going back to this is the beginning of European trading today. Here's the London, and right here is the London. Where's it at? Right here. The London and the Frankfurt and the Swiss and the Barcelona or Spain or Amsterdam and Milan. It's the European Open basically right here. And you can see it took it up for a little while, made new highs to compensate for yesterday's move up, and then they brought it right back down again to right around our settlement price. And then from there, that was the unchanged spot, right down in here. Right around here, that's almost unchanged, and that was a little minus. And you see, it's trying to just sit around. The stocks are staring at the numbers tomorrow and Friday, I believe it is. I think it's Thursday and Wednesday and Thursday. And so remember there's a mountain. I mention this every so often. I like to remind people that when you're a fund or an institution or a hedge fund or a retirement fund of any form, they incorporate. Okay, when you're going to take that money and invest it, you incorporate and create a corporation. You create an identity, and then what happens is that with that incorporation is a manifesto. In other words, the rules of what your corporation is going to do. You're going to invest money. You're going to buy. And they all get kind of fancy. You can have a nice, cheap little company, or a incorporation, and just give it a generality. Or they'll get very sophisticated and explain their investment style. Okay? And a lot of them do. They spend tens of thousands of dollars to create their incorporation. And then money looks at it and goes, okay, this is safe enough for me to put $500,000 or $1 million or $250 million in because it's incorporated correctly that they could sue. They could, if they needed to try to get their money out of it. And so, without permission of the brokerage house, or not the brokerage house, the fund itself. So what happens is that with this fancy incorporation, a lot of them talk about inflation, what they're going to do if they see inflation. You got to imagine a lot of these funds that are out there managing billions upon billions are incorporated when there was a time where inflation was at 1% and 1.5% and 2%. And they had things in there saying like, if inflation goes to 2.25%, they're not going to 3%. They don't talk about that. They go right to like, if it goes to 2.25% or if it goes to 2.5% or 3%, they're going to do X. Sell some stocks, maybe sell calls. They might be a very sophisticated fund, and maybe they're going to suggest that they will buy puts, they will buy gold, they will buy silver on a percentage to their equity base, their VWAP, and it goes on and on. It's very sophisticated in the sense of how they lay it out. It's not sophisticated to understand. It's just sophisticated on what they list. All the different, like, imagine if you had to read all the parts in your computer. Like, where would you stop reading? The brand name, the brand number, the amount of bytes and how much electricity, how much current it can take. So what happens is that stocks are locked on inflation now because the funds are locked on inflation now. So they don't have a choice. If they could be, imagine if you're a fund and you've been making money now for 10 years, but you do something different that you said you were going to do in your incorporation. You can be sued. So you're making money, you're paying your clients, giving them dividends, and you're getting sued by them because you did something wrong by not following the rules of your incorporation. I got a son that works for a law firm. He's part of the portfolio team. They do that all the time. They do class action lawsuits like that. So when you look at the stock market and you say, why is it so, would you use? You had a good word for it too. Unsettled today. It's just in a tight range, really. But that tight range is unsettled also. It just made a high at the European Open. It made a low to yesterday's high as the Americans started to come in at 6 o'clock Eastern Standard Time. And so they're all sitting on the fence just waiting and all they're seeing is rotation. They call that rotation. What happens is that when you're a fund, and I know I'm emphasizing the funds because they pretty much run the market when the Fed is not running the market. Okay, they're the imagine the Fed being the highway and the police on a super highway, and then the cars riding on it are the funds. Okay, and so they have to follow the traffic signs and they have to, drive cautionary, not darting in and out and so forth. And if they get caught, they get tickets and so forth. And that's the lawsuits. So right now they're sitting back and they're rotating. So they sell a little of their portfolio, because their stocks in that portfolio have risen. And then they also go and buy some stocks that have dropped below so they can do the dollar cost averaging in both. Dollar cost average up and dollar cost average down. And that's what makes markets go up and down throughout the day. Does that make any sense, West, or what? I hope I'm not just rambling here. I'm just on in one of those modes, just describing what we know, what the markets do and why they do it. But unsettled sound like a good statement. I like that. And it's true. They're unsettled because they have to do something. West trying to listen to it anyway. Well, I can go slower, and if you didn't understand something, or you want me to just, not that you didn't understand it, is if you want me to respond again to something, just say funds, how funds work, or why market goes up and down, and I'll go in there and explain to you what the initial nature of it is, what's doing it. I remember I was in the hedge fund. I was a trader on the floors, and then I was in the hedge fund industry, and so I've been in between. I've been everywhere when it comes to the financial markets, how they work. So yeah, I've seen it up close and personal. So it's not much of a mystique to me. If anything, the mystique to me is that someone would hand money to somebody that's stupid. That's the mystique that always amazes me. How they end up handing money to people that are just not that smart. But they sell the item well, I guess that's what a free market system is supposed to do. That's the way free markets are supposed to function. Buyer beware. They have it on our currency or something like that. Kentur or something like that in Latin. Buyer beware. So in other words, do your due diligence, basically. And that's what we try to do. We try to explain the mechanics, and you have identified one of them, like the market looks unsettled. Well, it's going to go up and down because funds are rotating out of some stock and then into others. And why they rotate out of them, it could be news, earnings. It could be it's going up higher than they were expecting for the time period, so they liquidate a little of it, and then they go and buy something that has been going down that they still see as undervalued, and they buy that. And that's why you get the choppy action you see in a marketplace. I hope that makes some sense. All right. From there, where are we going next? We'll go back to the currencies. And right there. There it is. Let's get back to the currencies there. And there is the yen. You can see the yen's been in a daily buy for a few days. It's holding up firm. Where's that line at? Let's put the line in there. Lime in the coconut. There we are. And the weekly, you can see the fast algorithm is moving up. The slow is having a hard time getting through the manifold, so it's might roll over again. You know, we might start to see a rollover again if this goes back down into these lows. What else can we say about any of this? Yen overall, you know, is locked in the mid 30s to the high 20s, and you know, it just, they don't seem to be really having much of an effect there. Let's put it up on J4X. Where's that mousey at? There it is. There we are. And right there, you can see it. The yen is just, you know, just kind of down off that big top it had, and then it's even higher. It got up to 153, or was it 152 right there? You know, so that this was all that scare with the banking problem and inflation combined it together. You know, it just pushed it way up. And I think it's going to be more locked in this area here for a while. Between that high, I doubt we'll even see the 40. But, you know, we'll watch the math. And the math will tell us in the end, you know, if it's going to go there or not go there. That's what it really comes down to. Right now, it's telling us that the overall weekly trend is just still on the downside with short-term pressure on the upside. Now, from there, we've already seen the Turkish lira. And we've told you the good news over there, which is really cool. They've found some natural gas. So that'll help them out for a while. Now let's hope the currency catches on and we start to see a currency like trading at 16 or 15 over the next year and a half, not 21 and 22. We'd like to see some relief to the population there of the inflation, currency inflation. All right, from there we go and look at the two that match against commodities, and the first one is the Canadian right there. You can see that Canadian went into the buy there a few days ago, but the weekly is still gliding down. Both are below the zero line and below the manifold here. So you see that underneath the manifold. So obviously there's more pressure, and I would assume we'll see when usually, you know, Canadian goes up when oil is going down, and when Canadian is going down, oil has been going up. So let's just show you the oil market at the same time there. There's the light sweet crude, and as you can see, this is the daily, and also as we scroll back, you can see back in here as the oil went up at this point right there, back, what was that? That was in early March, was peaking out. The Canadian, you can see early March we were in the 64s, and it climbed all the way up to the 82s, basically 81.70, 78. So that's what happens, is that as Canadian is going down, naturally oil kind of seems to go up and vice versa. I believe obviously the Canadian is following the oil, not necessarily leading the oil. Not as much as when we look at the South African rand and the gold contract. The South African rand was actually leading gold up until the political issues that occurred a few months back. So for like a year and a half, we were doing it on here. We were talking about it, and we were watching it every day, and it gave us afternoon rallies. When we saw a weakness in the South African rand, by the end of the day, we knew that gold was going to be higher than where it was now. And sure enough, it worked many, many, many times. But ever since the political turmoil that's kicked out down there about 2 months ago, it's really hurt it. So it's not as accurate. Now what we'll do is we'll show you over here the oil contract just to get a flavor, and we'll throw Canada up right here. There's Canada. And there is. There's the oil. So that plateau is developed, and crude oil and Canadian is China doing someone like that, only on a little bit more upwardly angle. So and it could roll back over again if this thing takes off to another level. Now we keep on hearing that they're going to, there's a lot of buyers out there in the oil contracts. So we'll see. It's just a matter of time before we get a clear action on that. What do we got here? Let's see. Just need to do that. There we go. Had to answer that. So that's there. Now let's do the opposite side of this. Let's go take a look at the South African rand. Right there. And you see as it's moving up, it's trying to tell us that gold is moving down. So let's go take a look at Mr. and Mrs. Gold. You see that pressure on it for those same days going down. Now, we're starting to flirt. It was through the manifold this morning, and I don't think we had a red line there. I mean, a red dot. We had a green dot. Now we have a red and a green dot, and it's just, was it just plus? It is just plus now. So it's just sitting on the edge. It's in the weekly buy, for going on a 6th week. So, and the fast has been the same way for almost 7 weeks. So I mean, it's like there's pressure on the upside. I am impressed that they haven't, the bond, the gold vigilantes haven't come in. The central banks themselves come in and beating it up. I mean, that's kind of like usually what happens. And again, the reason why they beat up gold and silver is they want to buy it, A, and B is they don't want anybody else to buy it. And the funds, the incorporated funds, the hedge funds and the retirement funds and all that stuff need gold to stay down at a certain level, because if it's beyond a certain level, they have to do other investments that the central banks don't like liquidate stocks or sell bonds, things like that. And so their incorporations, a manifesto for investing, is locked to inflation and gold and interest rates, bonds and stocks. They're all connected together. So it makes it a challenge. That's why, I'll tell you this, you could say this, West, and that is that, boy, talk about unsettled. You could say that the overall Federal Reserve or the central banks are unsettled. They're always fighting to keep these things all in line constantly. Talk about unsettled. I try to be simple. So there's the gold, and there is the South African rand. We'll switch it around. And here is the gold up on J4X right there. And let's go over to here and put up the South African rand. As you can see, that upwardly movement with this mild downwardly movement of 4 days, where it made a high in just 3 days there, showing pressure. And you can see these last 3 days right there, or 4 days right there, just kind of blew up, and we went into a buy like right there at the low. So it was starting to get picked up, and here's the political problem, started back in December. So, it's not as good a tool as it used to be. And we'll just keep on watching it because, it's what we do until it shows us that it's not worth paying attention to anymore. But I think it's worth it. Maybe the politics will change. I don't know. We'll see. Sometimes it does. A lot of times it doesn't. It goes, it's either way. So. All right. Now, What else we got going on? I guess the best way else to look at all this is that the metal. You can. I guess we could do this. We could just drift by the Mexican peso real quick and then go right to silver. So you can see here the Mexican peso, possibly that big circle. We should like change the color inside the circle to something like I don't know, like that maybe. No, that didn't do it. Let's see. Let's see what that does. It still doesn't do it. There we go. Let's change the inside of that circle to something like that. Inside that big circle is when there was talk that Mexico might join the BRICS. So we'll keep an eye on that particular action too. If Mexico joins the BRICS, then you've got that would be the number one currency in the BRICS would be the Mexican peso. An oil country with 5 million barrels a day, that type of thing, that'd be pretty cool. And at least it would, put some stability to the brick, make it firm. All right, what else we got going on? So from there we go right to silver. See what the silver looks like. There it is, right there. The silver's been acting okay. It's not threatening the daily sell at all. The weekly's looking very firm. Maybe it's playing catch up. It needs to get higher, because of the way gold is going. Saw a chart on the internet where the Fed is going to start reducing interest rates starting late this year. Yeah, probably, somewhere's going into next year and into 18 months end up at 3.8 or something like that. Yeah, I think they're going to change the inflation target to like 3% instead of 2%. And they're going to do their best to try to put some control over things. Unfortunately, the once you've had massive inflation, things kind of stay in that area again forever. So it's not like we're going to go back to the Trump years of, until Mr. Trump gets in and starts to straighten out the economy again, it's going to be like this. So yeah, I saw one money manager said that he thought that that they were going to start lowering interest rates in July. I don't see that at all. I see one more quarterly point, and then from there, and you can see it. Matter of fact, the best way to describe it is, let me see if I can put it up on the screen here. Where's it at? Right. I'm going to show you the bonds around the globe right here, and it'll make more sense for you. So here's the U.S. Treasuries. They're trading, you can see the 3-month is trading at 5% because they're anticipating the quarter point increase. And then 6 months out, they're figuring that there won't be any more increases anymore. And you can see it's dropping down. So basically, for the next 4 months, you see that right there, the next 4 months, they're thinking that the rates are going to be, it's going to still be climbing. So 4 months from now, you're talking about April, May, June, and July. And so that's why some money managers are actually saying they're going to cut. I don't think they're going to cut. They're just going to stop. And so they'll probably stop, and claim that they're going to watch and see and so forth. Government policies are changing right now without the president. They're slowly changing because the House of Representatives is a different party, and they're the Trump party. So they believe in growth and health and for everybody. Mr. Biden is more into that crony capitalism thing, where they only give opportunity for the party faithful. So that's that, and you look at the same thing here in the UK bonds are not really reflected. Let's see if I can find. Let's see if we can go change. Yeah, okay. So does it change it? I want to see what like gilts or really short term. We're not really seeing 3 month and 6 month and so forth. So the other bonds, let's see what we got. Let's try a few other countries. Japan shows 1 month. There's a 3 month there, it's a minus. As you can see, it's a minus 0.14. You have to pay to own a 3-month. You also have to pay to own a 2-year. So and the yield is let's see, what is it? I guess that's the yield or change. There's the yield, 1.25. Right? Yeah. So let's see. There's it's not as you can see the 5-year is a plus, the 10-year is a plus, but the was it the 2-year? Where's the 2-year? The 2-year is a minus, and so is the 3-year is a minus. So that's what's really going on. The bonds are telling us what they're trying to do. They're showing us their characteristic of what they think the Federal Reserve is going to do. So yeah, I can see. I would assume, depending on what's going on in February of 2024, if they're going to start cutting, we'll have a better feel for it then. And that is what is that? That's 10 months away. Yeah, it's 10 months away. So I don't expect to see any cuts between now and then. They can plow money into the regional banks and big banks and so forth, or even hedge funds and mutual funds and retirement funds. They can do all that without having to cut rates. They can just lend them money overnight for free, and that's zero interest rates, right? And so they can keep on lending money, short-term money, overnight, every night, just renew it again, and it could be sitting there for years. You have that money every night for free as an institution. So they don't really have to cut rates except for the population. So I hope that makes some sense. All right, what else we got going on here? Let's finish off the metals complex. I noticed copper was looking relatively frisky this morning. Yeah, there we go. It's trying to lift up, looking very good. Tried to it's through the zero line yesterday, even with it being down. And today it's lifting up. That's that warning of it there. And then you can see the weekly has climbed back up on the upside. So, there's some hope of, and what, I can't tell you how many times I hear on these financial channels, oh, China's open, the rescue, the cavalry's over the hill, they're coming, hooray, that type of thing. Don't think it has that much influence, but I think that's what influences copper. I think copper is the gold of China. So, that's what's influencing it there. The platinum, see what the platinum is doing. It's not acting any, it's not really that explosive at the moment. So there's platinum. It fell into the sell yesterday. It's a little bit up today. It's supporting the $1,000 area, and the weekly is still in the weekly buy for, a few weeks there. And that's the platinum. And then from there, we drift over into the energy sector. So there's crude oil. You see, just dead since that situation, the change of OPEC. It locked on the $80 or 81 area, that type of thing. You can see the weekly's trying to climb back up again. The fast is way up there. It's not letting go, which is interesting. And the slow is joining in again. So I could see the fast breaking the manifold and this thing going into a plus. I think they're going to raise oil again. I think they're going to be buying it. It's going to be, until they start pumping oil here in the States. It's going to be that way, and you can see the back month is the same way. It's discounted no less. So normally it's discounted up in the front and a premium in the back. So that's where we are right now with what's going on with the energies and the metals. The industrialized side of our economy. It's flirting. Just flirting with a positive action, but nothing more than that. All right, from there, we see the natural gas. It's showing life. It's they rallied it at the end of the day yesterday. It's holding that rally at the moment. The weekly is trying to turn. The fast is through the manifold here, but still minus. It's trying to get going there. Matter of fact, it's at 0.00000. So it's trying to get moving. What's this? What's going to happen? What's going to happen to First Republic? I understand they cut their they cut the dividend on the preferred stock. Stock itself is holding up relatively well. It's in the 14s. San Francisco private lending, basically. Yeah, I would imagine so. I mean, California is, that whole state is run upside down at the moment. Losing population, it's very expensive. People don't always, they were born there, they're going to stay there. It's taking a lot of pressure to push them out of it. What else can we say about all that? Yeah, I would say, Republic should survive. The stock looks like it wants to survive, and we'll see what they do with that. But I would imagine it'll survive, and they're supporting the regionals now. They can lend them money overnight without telling anybody. The Federal Reserve does that. The balance sheet has exploded up about $1 trillion and change almost in the last 4 weeks because of all that noise. So obviously they're sending more dollars to somebody right now. Yeah, it's sitting in the 14s. And like I said, they cut their preferred stock. Do you understand the difference between preferred and regular stock? Preferred is kind of like it's right after bonds. So no, you're a bank or a corporation and you sell bonds. If you liquidate your company, the bondholders get their money first, then the preferred stockholders get their money second, and then whatever's left over goes to the general stock out there, and that type of thing. So it looks okay. Matter of fact, I think I had it on a chart. We can go hunt it down on here. And would you like to see it on the chart? I can show you where our math is with it. Let me see. I had it on there too. Someone asked me about it. A friend asked me about it, and I put it up on the machine. Let's see. Let me go take a look at it. But yeah, I thought that was impressive that they cut the dividend on the preferred stock. This way, they keep that money, and they're able to build up their reserves more. What's the symbol on that stock again? Let me see if I can find it. Let's see, First Republic. Let me go look for the stock symbol on that. First Republic. The stock symbol is FRC. Okay. Now let's go there. FRC. Let's see. No, I guess I don't have it in there more. I had it. Add a symbol. I'm not sure why I deleted it, but let's put it in there. FRC, look up. There it is. There we are. There we go. And so there it is right there. And so let's see, let's move that line over to there. Let's see where the cell was. The cell was right there. So we went into a cell when it was up around 100. Let's go like that with it. There we are. It was in the weekly cell from the 100 area too. That's interesting. So we were in a weekly sell on the fast and the slow. There we are. Money new to run, that's for sure. You can see we went into the fast went into a weekly sell back in here in the 140 area, 130 area, and then the slow got into the weekly sell in the 120 area. And let's see, let's do this. Let's see. There was the buy. There was the sell right there. So they were probably not in disbelief. You couldn't take the buys. You only could do the sells in our work. This sell off here with this bounce tried to throw it in a buy, but we're in a weekly sell, so you can't do anything there. Let's see, move this over for you. There we are. And then, where's that? One more. Then it, it still fell down. It put you back into the short for a day, and it squeezed you a little bit, but at that point it wasn't that bad. And then it went back into the sell right here. I guess there are a bunch of non-believers, and just can't believe that the stock is getting crushed. We're in that weekly sell from back in here. Let's make that thing go all the way up to the top. So you couldn't play the long side with our math all the way back here in the 120s and 30s. So, and then if we move it over, see where it's at right now. You see it's trying to get back into the buy. The weekly is trying to turn up. We'll see. Maybe, it looks like it's going to be protected by the central banks. So, all right, traders, we're out of here. This is Doc from North America. We will catch you all tomorrow, same time, same channel. Fun times as usual. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, later, traders. Catch you on Happy to Hump Day and all the speculative noise and news that'll be coming out tomorrow.